If you own silver right now, what I'm about to share with you may be the most important perspective you hear this year. Not because I'm going to promise you overnight wealth, not because I'm going to predict some explosive price movement tomorrow morning, but because something fundamental has shifted in the financial system. And most people holding silver, or considering it, are misreading the signals completely. This isn't about hype. This isn't about fear. This is about understanding what's actually happening in the broader economy and what that means for anyone who treats silver as more than just another ticker symbol on a screen. My name is irrelevant. What matters is that I've spent years analyzing markets, studying monetary history, and watching how large institutions behave when conditions change beneath the surface. And right now, we're in one of those moments. The kind of moment where selling too early costs you far more than holding through the noise, where panic creates opportunity for some and regret for others, where the difference between those who preserve wealth and those who don't comes down to one thing: understanding what's really going on. So let me be direct with you. If you own silver and you're thinking about selling because the price isn't moving fast enough, or because you're frustrated, or because you saw someone online tell you to rotate into something else, I need you to pause. Because you might be about to make a decision you'll look back on with deep regret. And if you don't own silver yet, but you've been watching it, studying it, wondering if now is the right time, this conversation is for you too. Because what we're going to walk through today isn't just about one metal. It's about how money works, how markets move, how crises unfold, and how thoughtful people position themselves when the rules of the game start to change. Let's begin. Here's what most investors miss. They look at price, they watch charts, they react to daily movements and assume that's the whole story. But price is just the surface. It's the reflection of forces moving underneath. And right now, those forces are aligning in a way we haven't seen in decades. Let me give you some context. Over the past several years, central banks around the world have expanded their balance sheets at a pace that would have been unthinkable a generation ago. The United States alone added trillions to the money supply. Other nations followed suit. At the same time, government debt levels have reached historic highs, not just in absolute terms, but relative to GDP. We're talking about debt to GDP ratios that exceed what we saw even during major wars. And here's the critical part. When you combine massive monetary expansion with record debt and slowing economic growth, you create a very specific kind of pressure. Currency pressure, the kind that doesn't show up overnight, the kind that builds slowly, quietly, until one day it doesn't. Now, I know what some of you are thinking. I've heard this before. People have been saying the dollar is doomed for years, and yet here we are. You're right. Predictions of imminent collapse have been wrong many times, and that's exactly why we need to be careful with our language here. I'm not telling you the dollar is collapsing tomorrow. I'm not saying the system is about to implode next week. What I am saying is this. The probability of significant currency devaluation over the next several years has increased substantially. And when that probability shifts, the way you think about assets like silver has to shift too. Because silver isn't just a commodity. It's not just an industrial metal. It's also a monetary metal with thousands of years of history as a store of value. And when currency stability becomes questionable, stores of value become essential. Let's talk about investor psychology for a moment. When people buy silver, they often do it with certain expectations. They expect the price to move quickly. They expect validation within weeks or months. They expect some external event to prove them right almost immediately. And when that doesn't happen, frustration sets in. I've seen this pattern repeat itself over and over. Someone buys silver at $40 an ounce, watches it drop to $30, waits months for it to recover, and then sells at $35 out of frustration, only to watch it climb past $50 a year later. Why does this happen? Because they fundamentally misunderstood what they were buying and why they were buying it. Silver is not a momentum trade. It's not a quick flip. It's not something you buy on Monday and sell on Friday for a profit. Silver is a hedge, a form of insurance, a long-term store of value that performs best during periods of monetary stress and currency uncertainty. And we are entering one of those periods. But here's the challenge. Those periods don't announce themselves with a headline. They don't arrive with a press release. They build gradually beneath the surface until suddenly the conditions are undeniable. And by the time the majority realizes it, the price has already moved. Think about what happened in the 1970s. Inflation didn't appear overnight. It built slowly through the late 60s. Then it accelerated. And silver, which had been relatively stable for years, went from under $2 an ounce to nearly $50 in less than a decade. The people who understood the monetary dynamics early, who recognized the signs of currency debasement and positioned themselves accordingly, those were the ones who preserved and grew their wealth. The ones who waited for confirmation, who needed proof before they acted, who sold during the early stages because nothing seemed to be happening, they missed it. And that same dynamic is playing out right now. Let me walk you through what's actually happening in the broader economy, because this context is everything. Start with inflation. Official inflation numbers have come down from their peaks. But let's be honest about what that means. Prices didn't go back down. The rate of increase slowed. Your cost of living is still higher than it was 3 years ago. Food costs more, energy costs more, housing costs more, and more importantly, the structural conditions that caused that inflation haven't been resolved. We still have massive government deficits. We still have central banks trapped between controlling inflation and preventing economic collapse. We still have debt levels that cannot be serviced without either sustained inflation or default. Neither of those options is good for currency holders. Now add in interest rates. Central banks raised rates aggressively to fight inflation. But here's the problem. When you have this much debt in the system, high interest rates become unsustainable very quickly. Governments can't afford to service their debt at 5 or 6% interest indefinitely. Corporate borrowers start to struggle. Consumer spending slows. Economic growth stalls. So what happens? Eventually, rates have to come back down. Not because inflation is fully defeated, but because the system can't handle the weight of high rates combined with high debt. And when rates come down while underlying inflationary pressures remain, that's when currency devaluation accelerates. This is the trap we're in. Too much debt to allow high rates for long, too much inflation to allow low rates without consequence, a narrow path between two very bad outcomes. And silver thrives in that environment. History doesn't repeat exactly, but it does rhyme. And if you study the periods when silver and gold perform best, you'll notice a pattern. They don't rally during stable economic growth. They don't surge when confidence is high and currencies are strong. They rally when trust erodes, when governments expand the money supply to deal with problems they can't solve otherwise, when debt becomes unmanageable, when people start to question whether the purchasing power of their currency will hold. That's what happened in the 1970s, as I mentioned earlier. It happened again in the 2000s, when silver went from under $5 to nearly $50 between 2003 and 2011. Both times, the setup was similar. Excessive debt, currency concerns, monetary expansion, and a growing realization among investors that paper assets might not preserve wealth the way they once did. And both times, the people who understood the cycle early were rewarded. The people who waited for certainty missed the bulk of the move. Now, does that mean silver is guaranteed to rally this time? No, nothing is guaranteed. Markets can remain irrational longer than you can remain solvent, as the old saying goes. But it does mean the probability is high, higher than most people realize. Because the fundamentals driving silver demand right now are stronger than they were in those previous cycles. Industrial demand is increasing, particularly in solar energy and electric vehicles. Investment demand is growing as more people recognize the risks in the financial system. And central bank gold buying has reached record levels, which historically correlates with increased interest in silver as well. Supply, meanwhile, is constrained. Most silver comes as a byproduct of mining other metals, which means production doesn't respond quickly to price changes. When you combine rising demand with relatively inelastic supply, and you layer on top of that the macroeconomic conditions we just discussed, you create the conditions for a significant move higher. Not tomorrow, not next week, but over the coming months and years. If you're holding silver right now, here's what you need to understand. You are positioned for what could be one of the most important wealth preservation moves of your life, but only if you have the discipline to hold through the noise, because the noise is going to get louder. You're going to see headlines telling you silver is dead. You're going to see analysts saying precious metals are a relic. You're going to see other assets rallying while silver remains flat. And you're going to feel the temptation to rotate into something more exciting. That temptation is exactly what separates successful long-term investors from those who give up right before the payoff. Think about it this way. You didn't buy silver because you thought it would double in 3 months. At least, I hope you didn't. If you did, you misunderstood the asset. You bought it because you recognized some level of risk in the financial system. You bought it because you wanted a hedge. You bought it because you understood that when confidence in currency erodes, tangible assets tend to preserve purchasing power. Those reasons are still valid. In fact, they're more valid now than they were when you bought. So why would you sell? Because the price hasn't moved yet? That's not a reason. That's impatience. Because someone online told you to? That's not a strategy. That's outsourcing your decision-making to strangers. Because you need the money for something else? That's different. That's a legitimate personal financial decision, and you should always prioritize your immediate needs over speculation. But if you're selling out of frustration or fear, or because you think you can time the market perfectly and buy back in later at a lower price, you're making a mistake, because you have no idea when the inflection point will come. None of us do. What we do know is that when it comes, it will likely come fast. And if you're on the sidelines when it happens, you won't get back in at a good price. So if you own silver, my advice is simple. Hold. Be patient. Stay informed. And remember why you bought it in the first place. Now, if you don't own silver yet, you're probably wondering, is it too late to get in? The answer is no, it's not too late. But you need to approach this intelligently. First, understand what you're buying. You're not buying a lottery ticket. You're not buying a get-rich-quick scheme. You're buying insurance against currency devaluation and financial system stress. That means you should allocate accordingly. Don't put your entire portfolio into silver. Don't sell everything else and go all in. Don't leverage yourself or borrow money to buy it. Instead, think of it as a core holding. 5%, 10%, whatever makes sense for your risk tolerance and financial situation. Second, don't try to time the bottom perfectly. Nobody can do that consistently. If you're waiting for the absolute lowest price, you'll likely miss the move entirely. Instead, consider dollar cost averaging. Buy a little bit now, buy more if the price drops, buy consistently over time. This removes the pressure of trying to time the market and ensures you're building a position gradually. Third, focus on physical silver if possible. Coins, bars, something you can hold. Yes, there are ETFs and paper silver products, but if the thesis here is that the financial system is under stress, do you really want your hedge to exist only on a screen? Physical silver gives you tangible ownership. It removes counterparty risk. It ensures that if things get truly chaotic, you have something real. And finally, be prepared to hold for years, not months. This is not a short-term trade. If you need this money back in 6 months, don't buy silver. If you're comfortable holding it for 3 to 5 years or longer, then it makes sense, because that's the timeline we're talking about. Not days, not weeks, years. One of the hardest things in investing is having conviction in a thesis before the market validates it. You see the signs, you understand the fundamentals, you position yourself accordingly, and then nothing happens. Weeks go by, months go by, maybe even a year or two. During that time, you watch other people make money in other assets. You hear about friends who doubled their money in stocks or crypto. You start to question yourself. They abandon their thesis not because it was wrong, but because it took longer to play out than they expected. But here's what separates successful investors from everyone else. They understand that being early and being wrong look exactly the same for a while. The only difference is patience. You don't need to be validated tomorrow. You don't need the market to prove you right next week. You just need to be right eventually. And in the meantime, you need the discipline to hold your position while everyone else is chasing the latest trend. This is especially true with silver. The people who make life-changing returns in silver are the ones who bought during the quiet periods and held through the frustration. The ones who sold during the quiet periods are the ones who tell stories later about how they almost got it right. Do not react emotionally to short-term price movements. If you're checking the price every day and feeling anxious, you're too heavily invested, or you don't understand what you own, do not chase headlines. Headlines are designed to generate clicks, not inform decisions. Focus on the fundamentals. I cannot stress this enough. Do not buy silver on margin. Do not borrow money to invest in it. Do not use money you need for bills or emergencies. Leverage amplifies gains, yes, but it also amplifies losses. And more importantly, it forces you to have a short-term mindset when this is a long-term asset. If you're leveraged, you can't afford to be patient. And patience is everything here. There are a lot of people on the internet making bold predictions about silver. Some of them may be right. Many of them are just guessing, and none of them know your personal financial situation. Make your own decisions based on your own research and your own risk tolerance. Holding an asset that's undervalued while you wait for the market to recognize it is psychologically difficult. There will be moments of doubt. There will be temptation to give up. That's normal. But if you understand why you're holding, if you trust the analysis, if you've sized your position appropriately, you can withstand those moments. Let's zoom out for a moment and look at the bigger picture. For the past several decades, governments and central banks have operated under the assumption that they can manage the economy through unlimited money printing, zero interest rates, and perpetual debt expansion. And for a long time, it seemed to work. Markets went up, crises were papered over, the system held together. But every system has limits, and we're approaching those limits now. And when systems reach their limits, things change. The people who recognize that change early, who position themselves accordingly, who have the patience to wait for reality to catch up to their analysis, those are the people who preserve their wealth. Silver is not the only answer. It's not a magic bullet. It's not going to solve every problem. But it is one of the few assets that has preserved purchasing power across centuries, through empires rising and falling, through currencies being debased and replaced, through wars and depressions and every kind of economic stress imaginable. And in a world where trust in institutions is declining, where currency stability is questionable, where debt is unsustainable, having exposure to an asset with that kind of history is not speculation. It's common sense. I don't know if silver goes to $50 next year or 5 years from now. I don't know if it consolidates here for another 12 months before breaking higher. I don't know if we get a major crisis that accelerates everything or if this unfolds slowly over a decade. What I do know is probability. And the probability that silver performs well over the next several years is higher than it's been in a long time. The macroeconomic setup is there. The supply-demand dynamics support it. The historical patterns suggest it. But probability is not certainty. And that's important to remember. You could do everything right, understand the fundamentals, position yourself appropriately, hold with discipline, and still not see the outcome you expect in the time frame you anticipated. That's the nature of markets. That's the nature of reality. Never invest more than you can afford to lose. Never put yourself in a position where you're forced to sell at the wrong time. Never abandon your responsibilities or your financial security chasing an investment thesis. The goal here is not to get rich quick. The goal is to preserve and grow wealth over time while managing risk intelligently. If you approach silver with that mindset, you'll be fine regardless of what happens. If you approach it looking for a home run, you're setting yourself up for disappointment. One of the most important things you can do right now is continue educating yourself. Not about price predictions, not about which YouTuber called the last move correctly, but about how money works, how markets function, how central banks operate, how currencies are debased, how crises unfold. Because the more you understand these systems, the more confident you'll be in your decisions. The less you'll be swayed by short-term noise. The better equipped you'll be to navigate whatever comes next. Read about monetary history. Study the 1970s. Study Weimar Germany. Study what happened in Argentina, in Zimbabwe, in Venezuela. Not because those outcomes are guaranteed here, but because they show you what's possible when currency management fails. Understand the mechanics of inflation. Not just the definition, but how it actually works, how it's measured, how governments respond to it, how it affects different asset classes. Study market cycles. Learn how bull markets develop, how bear markets shake people out, how long periods of consolidation set up major moves. The more context you have, the less reactive you'll be. And in markets, being reactive is usually how you lose. Now, I know some of you are skeptical, and that's healthy. You might be thinking, this sounds like everything I've heard before. People have been predicting dollar collapse and hyperinflation for years. Why is this time different? And the answer is, maybe it's not different. Maybe the system holds together longer than anyone expects. Maybe central banks thread the needle perfectly and we avoid major currency devaluation. It's possible. Even if the catastrophic scenarios don't play out, even if we avoid the worst case outcomes, the direction we're heading is still clear. More debt, more monetary expansion, more currency debasement, more pressure on purchasing power. Maybe it happens slowly. Maybe it's managed in a controlled way. Maybe we get inflation instead of hyperinflation, devaluation instead of collapse. But in all of those scenarios, silver still performs well because silver benefits from currency weakness, regardless of whether that weakness is dramatic or gradual. So even if the skeptics are right about the timeline, even if this takes longer to unfold than some people expect, the thesis still holds. Owning silver is still a rational hedge. Holding it is still a disciplined strategy. And selling it now just because nothing dramatic has happened yet is still a mistake. So where does that leave us? A transition from an era of unlimited monetary expansion and low consequences to an era where those consequences become unavoidable. A transition from currency stability to currency uncertainty. A transition from trust in institutions to skepticism and self-reliance. We're not there yet. The majority hasn't figured it out. Mainstream investors are still focused on other things. But that's exactly why now is the time to pay attention. Because by the time everyone agrees, by the time the shift is obvious, the opportunity will be gone. The question isn't whether you can see the future with perfect clarity. The question is whether you understand the present well enough to position yourself intelligently. And if you understand what's happening with debt, with monetary policy, with currency pressure, with supply and demand in the silver market, then the answer is clear. Holding silver right now is not speculation, it's preparation. And buying more for those who don't yet have exposure is not chasing, it's positioning. The next few years are going to test a lot of people. Financially, emotionally, psychologically, there will be moments when the market makes no sense, when everything you believe gets questioned, when patience feels impossible. But here's the truth. The investors who succeed in difficult times aren't the ones with the highest IQ or the best connections or the most sophisticated strategies. They're the ones with discipline, the ones who can hold conviction when everyone else is panicking, the ones who understand that markets reward patience more than cleverness. If you own silver, you've already made the hardest decision, the decision to position yourself differently than the majority. Now you just need to trust that decision. Give it time. Let the fundamentals play out. Don't let frustration push you into selling too early. Don't let fear push you into abandoning your thesis. And don't let the noise distract you from what matters. Because in 5 years, you'll look back at this moment, and you'll either regret selling or you'll be grateful you held. And the difference comes down to what you do right now, today, in this quiet period before the shift becomes undeniable. Stay informed. Stay disciplined. Stay focused on the long term. And remember, Understanding cycles and preparing accordingly will always matter more than reacting to noise. Thank you for watching. And whatever you decide, I hope you make it with clarity, confidence, and a full understanding of what's at stake.